All right, guys, welcome back. Another webinar. Today is Thursday. We're going to be looking at some aspects into the market. You know, some things that are happening here and there. So I've separated a few things, a few topics for us to talk about. Let me just log in here. Second. There we go. So I've separated a few topics for us to talk about. So let's just start first of all talking about the economic calendar, as we always do. All right, and then after that, economic calendar, and then after that we can go and discuss a few pairs, and of course the big news, the NFP for tomorrow. All right, so I've separated a few stuffs for us to talk about. After that, we're going to be looking at some pairs, and then we're going to be talking about the NFP. If you have any questions, you know, anything that come to your mind or anything, just don't be shy. You can ask me questions. You can send me the messages here. Let me send a message here on the chat. Send your questions. So first of all, FinLogics. All right, let's go to tools and then economic calendar. And we're going to be going for all the countries. Select all. And we're going to go for this week all the way down to Thursday. And we can see that, but so we can see here that we have a fair bit. I'm just a bit lost here, guys. Sorry. Yeah, there we go. So Thursday, 4th July. So we did have some pretty big news, pretty data coming from USA yesterday. I've talked about it, this data, and I've talked about the Eurodollar possibility to, you know, continue to grind higher on this Tuesday, the one that just passed. And that's exactly what is happening. You know, we open up on Monday, Eurodollar with a gap, all right, 0.2% gap. So Monday open up with a gap of 0.2%. So the price had a spike up and then continuation, and it came back down, closing the gap, and then a continuation upwards. So that was a pretty simple trade. You know, of course, the market has to come back and fill up the price. You will never probably see a, you know, any pair, or it can happen on stocks. Okay, it can happen on stocks. It can happen on bonds or any other type of market, but it's very improbable that it will happen on Forex. Okay, the reason being is Forex is moved by the economy, right? So therefore, anything that happens on a central bank, or any decision, I would say, or any talk, even a talk, all right, even a speech or something that happens on a central bank, we have it as a very how can I say that, a very sensitive way. Okay, so anything that goes around that will be spike up, or whatever spike down, it will close the gap eventually. So again, let me go to chart here and show you Eurodollar chart. So that's a daily chart. No, let's go for the 1 hour. So here you go. So it's pretty clear to see that this was the gap, right? From the close of this candle to the open of this candle, we saw this this range without anything. All right, you can say, look, but there is a little bit of a, you know, a retracement down here. Well, you can count these as well, and we still have some gap right there. And the market came back, closed all this gap, and then it continued to go up. And I've mentioned that, look, guys, we can potentially, you know, we can potentially come back down here, and then we can go up to the level of 108. That's exactly where the price is right now. Okay, so that was my trade of the week. That was pretty much it. And you know, expecting a few more surprises. Nothing too crazy, but still, I'm out of this trade already, but I'm still looking to trade Eurodollar this week. So let's have a look on what we had from the FOMC minutes. Okay, so how can you access the FOMC minutes? It's pretty easy. Just go FOMC and then you type minutes, enter, and then it's the first websites, the governor, sorry, the Federal Reserve Board.gov. Okay, so that's the official one. And we just had an update on the minutes. So June here, and then minutes, and then you can click on HTML and we'll open, sorry, yeah, if you click on HTML, it will open here. And this is all the members, you know, attendance that was there. This is not important to us. This is not important. There's one part that is really, really important to us. Let me just get to it. Oh, there you go, stuff. Economic outlook. So this is a very, very important part to us, right? Especially for the US dollar that has been, has been US dollar, US index, US dollar index. There you go. We can see that the US dollar has rise quite a bit, okay? All the way down and then all the way up again. But look, we came up from a downtrend, you know, a continuation of the uptrend now, and it's still we saw such a big move happening on Eurodollar, right? But we haven't seen much happening on US dollar index. So from the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 hours, pretty much 12 hours, we didn't have a huge move. As you know, if we come back and look at these, this is a huge move. Okay. And remember, this is another gap, market coming in to close the gap. Okay, so that's the gap theory. But anyways, so we didn't have a huge move like this to, you know, to be happening. So Eurodollar could, or even GBP USD, look at GBP USD, how pronounced this movement is. So yeah, so let's have a look at the staff economic outlook for the FOMC minutes. So the economic forecast prepared by the staff for June meeting was similar to the projection at the time of the previous meeting. So from May, the economy was expected to maintain a high rate of resource utilization over the next few years, with real GDP growth projected to be roughly similar to the staff's estimate of potential output growth. The unemployment rate was expected to edge down slightly over the remainder of this year and the next, and then to remain roughly flat in 2026. Okay, pause there. Let me do something here. Let me take this color. Okay. So where is it? So here, the unemployment rate was expected to edge down slightly over the remainder of this year and the next one to remain roughly flat in 2026. Okay. What do you guys think that case can potentially occasionate on the US dollar? All right. So now let me grab my pen again. Oops, sorry. This one. There you go. There you go. So if we look, right, if we just read this sentence again, the unemployment rate was expected to edge down slightly over the remainder of this year and the next to end the next and then to remain roughly flat in 2026. So basically, they're suggesting to us that they're bringing unemployment rate down. And this, of course, is good for the economy because we will have more people working on the labor force, and therefore more people will be producing. So PMIs will be higher, manufacturing PMIs will be higher, services will be higher, people will have more money, people will be able to spend, so retail sales will go higher, and so on. And that's another thing I want to talk as well. Look, we always, I typically I always come here and say, look, this can happen, because it's pretty simple. It's such a simple topic. Look, if we have more people working on the labor force, I'm not talking about another one person. I'm talking about another 200,000 people. I'm talking about 500,000 people working. So we had to think quite big because we're thinking about a whole country, a whole economy. We're not thinking about the city that we live, right? Because sometimes we can tend to be how can I say that? We can tend to be small thinking towards that because it's something that we can't see. Some people are really good on thinking big in terms of economy, but majority of the people are not. So when we look for the economy, we can't forget that there is a sense of sentiment for the whole country and not only for one particular city. So when they're saying that they will bring, well, the unemployment rate was expected to edge down slightly over the remainder of this year, they're saying that the unemployment rate is to become better towards the end of the year. All right. So unemployment rate to become, oopsie, lower. So if it was, let's say, 2.2% or something, right? Sorry. Then it was supposed to go for 2%. Oh, that's such a small decrease. Well, indeed it is. If we looked at it, it's like from 2%, 2.2 to 2%, it's nothing. But imagine how many people are on these 2%. We're talking about probably like 1 million or maybe 500,000 people. So it's not small. So it's a big change. All right. So this is what I want you guys to always think about it and try to have this understanding as well. All right, moving on. Let me grab my pen again, my mark. Oops, sorry, it's too small. There we go. So total and core PC price inflation were both projected to be lower at the end of this year than they were at the end of the last year. Sorry, to be lower at the end of this year than they were at the end of the last year. Okay. The staff's inflation projection for this year, which included a preliminary reaction to May CPI data, were little changed on balance from the inflation forecast at the time of the previous meeting. The inflation forecast was the inflation forecast was higher, however, than at the time of the March meeting and the March summary of the economic projections submissions. Inflation was still expected to decline further in 2025 and 2026 as demand and supply in product and submissions, and labor market continue to move into better balance. By 2026, total core PC price inflation was expected to be close to 2%. Not too sure, but okay. The staff continue to view the uncertainty around the baseline projection to close to average over the past 20 years. Risk to the inflation forecast was seen as tilted to the upside, reflecting the possibility that more persistent inflation dynamics or supply side disruption could unexpectedly materialize. The risks around the forecast for economic activity were seen as skewed to the downside on the grounds that more persistent inflation could result in tighter financial conditions than it is the staff's baseline projection. In addition, deteriorating household financial positions, especially for lower income households, might prove to have a larger negative effect on economic activity than the staff anticipated. It's okay. So pretty much, if we look to all of what was just say is economic projections, of course, the economic outlook, but nothing has been changed since the last projection. And I thought it would be changed because if we look for inflation, okay, so let's come back here. Sorry. So let's go for let me put the month here first. Sorry, last one. First, there we go, all the way to now. Okay, perfect. And then we can select US dollar only. CPI, Consumer Price Index. Let me find it, guys, just a second. See, unemployment rate, we were just talking about. And then we say, the unemployment rate was expected to edge down slightly over the remainder of this year and the next, and then to remain roughly flat. But indeed, it actually went up. All right. So it was expected to have no change for the month of May, but it did had a change and was 0.1 higher. Okay. So we can go and have a look here. We can see that it's such a stand-up comedy what they just say. Because if we look at here, 2023, okay, 4th of the 8th, we saw that the rate was at 3.5%, the actual, okay, and the forecast was at 3.6, so that was pretty good, okay. But from 3.5 now all the way to 4, that's not good, right? And we can just come back here and we can see this. Unemployment has been higher already in 2021. We went all the way to 6, 7, 8, 10, 14% in 2020. 14% of unemployment. This is huge, all right? And the previous was 4. So it's a 10% more people unemployed on the US than, you know, what it was before. Anyways, then it went all the way down, but still 4% is pretty high. Okay, how many people are in USA? So 333 million people. Okay, so if we make a simple maths, let me grab my calculator here. 330, so let's say 300 million, okay, just to make it easy. All right, so 300 million. So that's 100, that's 1,000, that's 300 million people. Okay. 14% of that. 42 million people were unemployed. That's huge, right? And that's why the US dollar was so weak in 2020 and so on. But anyways, so it's still, unemployment is still heading higher. And I don't see unemployment coming lower anytime soon as well. But anyways, so as we were just looking at for the CPI, there we go. Here, this one. I don't want the core. I want I want this one, and I want this one. Okay, so that's the year over year. That were expected to have a 3.4%, and it came in at 3.3%. But most importantly, wasn't the year over year. Of course, the year over year is very important, but there was 0% inflation in a month over month. That haven't happened since 2023, November 2023. Let me have a look here. 0.34. Yeah, there we go here. November 2023. Okay. So that haven't happened since then, and it's pretty not used to happen, all right? It's only a few times as we can scroll down here and have a look at this. Very, very good to designed by FinLogix. Okay. So I would you guys highly recommend to use the economic calendar or anything related, to charting, economic calendar, data related, historical data. You can have such good tools here. So let me come back in, have a look. You can choose it, you can select all the countries. It's a very easy, very simple to use. The weekly highlights, you can click here and you're going to have the big highlights for the week. You can download it. All right. You can open the image, you can send to your friends. It's really, really nice. Very handy tool. Okay. Is made by ACY Securities. Okay, so it's a sister company from ACY FinLogix. All right. So coming back here. So where is this now? Oh no, I lost it. I'm gonna have to have a look again. Just a second, guys. Let me come back here. Sorry. I didn't know that was gonna get my inflation off. There we go. Here, month over month. So we had 0%. So 0% was the actual, and that made the US dollar so weak. All right. So we can see here June 12th. We can come back to the chart. June 12th. There we go. Right there. See? So when we had this release of the inflation coming lower, it's what happened with the US dollar. And I've, if you have been following us for quite a while now, I've been warning that the US dollar would do this because there was like, all the tension were building up. But now, the same way when the same way we went down, we went up pretty quick. So that was pretty good for the US dollar. And of course, if we look for any other currency like GBP/USD, we can see here that it just happens the opposite of what happens on the US dollar index, because we have US dollar as the correlation here, as the quote, sorry, and not the base. So therefore, if US dollar go down, then pound dollar go up, and vice versa. All right. Okay. So coming back here for the economic calendar, let me put all of them this week, all of them. There we go. Coming back to Thursday. So we just had the United Kingdom construction PMI. Okay, so that wasn't too good. Expected to be 52.6. It came in at 52.2. Switzerland inflation rate was pretty good in a sense, not for the currency, but for the economy, it was pretty good, 1.3%. And they are the only ones that have these inflation, okay, the year over year. The closest one that would be is Europe, and Japan. Okay, so we can imagine how good they were in controlling inflation and money supply. I mean, Switzerland. So going to tomorrow, Friday, we want to have much things until the big day. That is until the big time. That is 10:30 p.m. in Australia, and we're gonna have the average hourly earnings. We're gonna have the average hourly earnings year over year. Non-farm payroll, and then the unemployment rate. So the unemployment rate is expected to be reminded at 4%. There we go. So the last release was 4%. Okay. And they're expecting pretty much no changes. So, oops, sorry. Oh no. Where is this now? Oh, there we go here. So the NFP is expected to be 119,000 from 272,000. So we have a question here. Do you think NFP will make dollar stronger? Okay, so if I think that the NFP will make the US dollar stronger, that's a really good question. I would love to know that, but yeah, look, I'm just thinking here, how can I explain this in a simple concept? Because it's so strange what is happening on US. Okay, it's like phases, it's like waves. Like last month, the US economy was so good, better than any other, and then this month already, starting the month already, so bad, right? We can see these that we had 272,000 additions of new jobs, and now we're expecting pretty much very close to 100,000 less in 1 month. Okay, so all of the 272 people that got employed, only 170 stayed. So that doesn't make any sense for me. But okay, now another point is, let's have a look at the PMIs. Okay, oh sorry, this week here. If we look at the ISM manufacturing employment and manufacturing PMI, look at how bad they were. 48.5, 49.3 compared to the consensus. Okay. And the global manufacturing PMI as well, 51.6, a little bit down, a tick down, but still down. So if there are no people producing it, if there are no people manufacturing it, then yes, most probably we won't see a stronger US dollar tomorrow, and we will probably be looking at, where is my chart? There you go, US dollar. We will probably be looking at US dollar coming back down to this level. So if we can possibly break this, we will probably come down to this area of 105.50. Okay, that's my um, um that's my opinion. What do you guys think about the US dollar? I'm curious to know, Zodwa. Do you think it will do you think it, do you potentially think that it will potentially could be able to go higher? If we continue to break the stop, then yes, but I don't see the US dollar retracing back to this area. Okay, I just don't feel like it's not the right time. I do believe that we can come down to this area. And as we coming down to this area, we can see, let me take this off. We will probably be able to see Eurodollar, oopsie, Eurodollar coming to this area, 188. Okay, 188 would be my take for Eurodollar. 188 would be my take for the Eurodollar. Probably come back lower or even not. Okay, because it's so strong, Euro is so strong at this moment that we can potentially just go ahead but I don't see any reason why Eurodollar could, at this moment, why it could come lower. Not at this stage. At this point, I also don't see it going up. Yeah. So we are pretty lined up on the ideas. I just don't believe on the uptrend that everyone is thinking of the US dollar that can potentially continue to, go higher, and because so we had some comments from the Fed yesterday. Yesterday was Wednesday. Oh no, sorry, so Tuesday. So 2 days ago, talking about inflation rates and a few other stuffs. But still, they can talk many times as they want. If the data they're coming, it's not what it is, they're saying, they're just losing credibility. And if they're losing credibility, the next time they talk, no one will believe in them. So the market is not looking at data at this moment. I was actually just having a chat with one of the boys in the trading floor today, and I was like, they were like, look, but the data is coming good for some country, and it still continue not seeing the improvement on the currency. Yes, data can come lower, the data can come higher, the data will come whatever it has to come. But if the context of the market is not what, if the data is not on the context of the market that the market is looking for, then it's not going to happen anything. So the way I look is, what is the most important thing at this stage of this week? This week, what I've been talking about already so many times on the YouTube, on the last webinar. What is so important? The answer is elections. Okay, so let me write this down. I'm going to write it down on orange. So elections. Okay. Where about? Well, there's two places, France and USA. Okay. So these two places here is having elections. And guess what? Who gets most affected? Euro, because France use euro, and of course USA use US dollar. Okay. So we can expect a very pronounced and very crazy week ahead, on next week, and already this week we're already seeing it. The Eurodollar going down and then all the way up. So we did had quite a big move this week. Did I answer your question, Zodwa? I hope so. Let me clean all of these drawings. Okay. Now let's have a look at gold as well. Gold is going up. All right. I was talking to Peter Pan. You guys probably know him. Yes, you did 10. It's not a problem. So we can see that gold has come. Oh, that's a 4 hour. I wonder 1 hour. So gold has come higher, and it can. I was expecting gold to have a breakthrough these lows. Okay, it did break through, but then it didn't break through this low. And that was the big one that I was waiting for, the 2280. And I was even looking at 2280 target. Okay, so I've shorted here, and I was waiting for this to get TP, so then I could short it again. But then we had all the bad data coming from US, and that's another that's another market then, because we have we have euro being very strong because of France elections, but we have US dollar being very weak because of the data coming from US. And between dollars, between having US dollars and having gold, what would you prefer at this moment? We are on an election. We are having a very crazy time on data. We just saw that the PMIs came lower, unemployment came higher, average area earnings came higher. Now they're expecting 100,000 more less people in last month payroll. So this is all the things that are not working good, mate. It's not working well, right? So that's my only opinion on gold is longing, because I thought, well, if it can come down a bit, then I would definitely would be looking to long these. That's a very good trade in my opinion. Especially, we just need to be careful, because last time when it went up, this can be a potential target, and it can potentially come back to this area. Okay. But in my opinion, with all of the bad data from USA, with all of the inflow comings into gold, we can potentially see a higher price on gold. But everything can change. Another currency, another pair currency that it's caught in my attention is Euro Aussie. Euro Aussie, this is a daily chart. No, I wonder 1 hour. Euro Aussie is looking great for short position. So we had where's my pen? Oh, there we go. We had Euro very strong against the US dollar. So Euro is stronger over US dollar, but Australian dollar is stronger over euro. Okay. So because this is data. Sorry, not this one. This is data. And this, they're looking for elections. Okay. So what I mean by data here. So if you guys haven't seen, the Australia CPI came in at 4%. And that's higher than expected. Okay. So yes, we are looking at a stronger Australian dollar. And even if we look for Aussie dollar, sorry. Look at what is going on here. See, so the market has just changed, has just shifted. US dollar is so weak towards some currencies, but it's very strong again against USD JPY, for instance, that just hit all-time high since 1931 or 1938, if I'm not too sure about it. So if we look at this, yes, this is huge. It is a huge move. It hasn't stopped. Okay, went all the way up. So that's a very interesting topic to talk about. Not today, but yes, maybe next Tuesday we can talk about it. But yeah, market, I think the whole market is looking at Eurodollar at this moment and gold. So I will just be talking more about those two topics for today. Does anyone have questions? No questions? No? Okay. No. All right. All right, guys. So thanks. Thanks for coming along. I think, I think we probably would have a lower NFP, a stronger euro, a weaker US dollar, and we will probably continue to see, yes, of course, as I just mentioned, USD JPY, yes. That's another case apart, because politically saying, it's nothing concrete of what's going on with the JPY, with Japan. Okay, so that's only my take. I wouldn't, have JPY on my portfolio. I would prefer stick to something like Eurodollar, pound dollar, gold, or even Euro Aussie or Australian against US dollar as well. But yeah, so that's all for today. Hope you guys enjoyed it. I hope you guys could take something out of it. And I see you back on next Tuesday. Enjoy your holidays over the weekend. And yeah, take care and catch up later. See you guys. Bye-bye.